Hey guys, welcome back. I'm going to do a couple of days worth of trade recaps I sent out on, I believe, what is this, Monday and Tuesday. And then I'll make another video for Wednesday and Thursday just to kind of break them up a bit. If you already haven't, definitely subscribe. These are the Signals Group's trades that they get as well. Make sure you stay to the end. I'll show you the bias behind them and basically why I did what I did. So right off the bat, I only trade New York, so we can kind of fast forward to closer to my time. Okay, so this is around my time. So there's a couple areas that interest me. So I trade off induced wicks. And the way these wicks work is it's one of our entry models, one of our POIs. I prefer these react from 50%. If they don't react from 50%, they need to show me a little more confidence to get into a trade. Whereas if they react to 50%, it doesn't take me much convincing, basically. So there's a couple of areas that interest me here. This area I expect a reaction from. Reason being is we already took this high. There's nothing left here. This here mitigated that deeply. This here mitigated that deeply. To me, this is all just stacked liquidity. It's all going to get taken in one go. At least that's the thought process on this one. So Monday was only one trade. Tuesday was a bit of a tougher day. I had to take some losses and adapt a bit, but I'll show you guys that as well. So this is a reaction from 50%. This is exactly what I like to see. Once 50% is tapped, I can basically go down to the 1 minute. And essentially what we're looking for is any kind of failure of bearish vector candles. So bearish vector candles would be something like this, where it's all bearish candles in a row, and preferably I'd like to see bullish vector candles going through them. So this is good. And here you get a bit of a commitment, which is essentially what I like to see. Now we want to make sure this isn't just inducing people into buys, and we don't want to be the early buyers. So here again, I get bearish vector candles. If you notice here, as long as price doesn't come below this, these bullish vector candles are still active. So all I need to see now is essentially some kind of confluence that price is going up. So we have a set of bearish vector candles. We have a set of bearish vector candles. Again, these can be nothing more than inducing people, which is why I don't take it on the first set of bullish I get. So we get bullish candles here. Those aren't vectors yet. And here we start getting bullish vector candles. For them to be vectors, the previous candle has to break. Basically how do I explain this? Let's see. So if I look at this candle, the following candle has to break it without coming below. If it doesn't break it or it comes below, the chain's violated. So in this case, this first candle wouldn't count for anything. It is just a liquidity wick. Here you can see we go through the bearish vector candles. This is still holding, which is telling us the bullish buy orders are being protected. I get one pullback, and as soon as I get a break of this high, that's enough for me to execute. And this is good enough for me to try. I'm going to just cover this a little bit below. I don't need to cover all this, because if price comes down here, I'll just take the loss and just see if this area is valid to start with. The only logical place for me to go to is the area I showed you guys on the 1 hour. So that was the thought process on that trade. So that one went to TP. This day was pretty clean. That was the only trade. The next day, I had a bit of trouble, but we'll talk about that. So just fast forward to the next day. And essentially, there is a couple areas that stand out to me on that as well. So right off the bat, we have, again, an induced wick up here. So this one's a little bit more special because it was created by news. If they're created by news, usually it produces a pretty decent reaction. So let's see, let's get closer to my time. And one more, or no, two more. All right, so I have a couple areas here that stand out to me. There's a liquidity here that's particular to me. If it reacts, there's a possible short. There would be a possible short from this zone. And all in all, I am still favoring buys since the last thing we did is created a bullish range. So this is my last range. Everything else is kind of just internal. So when you're playing internal, it usually, it's more reactive off any zone. Whereas when the market's trending, you just go one direction. This isn't trending in any way, obviously. So if we just go down to 5. All right, so price, I just want to see. All right, so for those of you that have followed me for any time, you'll know that I also use DXY for reaction areas. So just to kind of show you the thought process on this one, it might not make a lot of sense from a Euro perspective, but this is DXY inverted, by the way. So March 4th or 5th, sorry. So you can see what happens here, but that doesn't matter. My liquidity gets hit here on DXY. What's important to know in this case is that I can actually use this to validate a trade. It's it has been pretty good for me. It doesn't work every time, but I think it was the next candle. So let's go to one more candle. So this reaction to me is valid because valid DXY is reacting from a valid area. So this trade this one kind of hurt. I ended up shorting this, and this was, I was hoping it would kind of run before the news. It was a bit slow to do so, and in doing so, I didn't want to hold risks, so I ended up just breaking even. To be fully transparent with you, the news candle that came through was large enough that it did some damage. And my nearest reaction area that would have interested me here, in this case, I would have actually been looking to come down to this level. Price never did that. So the idea here was short down to this level and see what happens. News started coming out, so when we got closer to news, I went break even. So this kind of here was one of two things was going to happen. Either we're going to target this wick or this is a rejection. I didn't know which is which, so I just went break even. To be completely honest with you, I don't usually do this during big news. I usually close the trade. For whatever reason, I decided to go break even. And price came through with one of these. I ended up eating about 1.2 R on this, even though it was break even. So this one kind of hurt. Still better than, leaving my stops open. But now I've created another area. So this is actually a red folder news. This is a red folder news. So now what I get is a induced wick. It's created by the news. So this is a reactional area. I can buy off that. I can sell off this. So this day, I actually got chewed up a bit more. At first I tried going with the momentum and the daily bias, and overall, so this was, I think, an entry on the seconds. So I ended up taking something in here on the seconds, and I kind of thought maybe the momentum pushes through. Wednesday and Thursday, the momentum kept going. On Tuesday, this one ended up being a loss for me. So at this point, between this trade and this trade, I basically eat 2R and losses. This one I shouldn't have happened. I should have closed before news. This one I'll take as a valid loss. So with what I showed you guys in the first video, you can kind of see how these are the bullish vectors. They can't be invalidated. So right here are my bullish vector candles. This is kind of the invalidation point. As soon as price came down to here, I knew that the chances of this trade working out were pretty slim. This is telling me the bullish orders aren't being protected and maybe order flow is shifting. So now all I need to see is basically price to show me that it wants to go up or it wants to go down. So if it wants to go up and it wants to go past this high, that's great. That convinces me we're going up and this trade will work out. However, the invalidation of these bullish candles got me a little bit worried, but I was like, you know what, I'll give this trade a chance. And the only reason I did is because we had this internal break here, and I was like, okay, well, we got an internal break, maybe it'll run. This is kind of with the fundamental direction, all makes sense. It's within the bullish range. It all made sense. So now I have this internal range that broke this internal range. So price either needs to break this or it needs to break this. And ultimately that gives me my directional bias. So price ends up coming through my stop, which is totally fine. So this kind of confirmed now that we're going down. We got vectors, we got pullback, we got break. This would be an ideal zone for me to short from. And this is my liquidity. This is my break of the range. So if this is the last flow that took out this high internally, this would become lit to me. So these are both liquidity levels. Again, after news, it's a lot of lower time frame PA, and I don't need much convincing to enter here because this not only broke this range, we also broke this range. There's nothing left to react to, so 1 or 2 bearish candles is enough, and I don't need to cover much. So within what I have in front of me, I know I can short all the way down to this news candle. This news candle itself is the nearest liquidity. So this was kind of the idea behind this trade, and price just started running, and here you can kind of see we're gaining momentum. So at this point, I don't expect price to pull back. If you want to be a little safer, you can cover well above this. If you want to be chintzy, you can just cover these 2 candles. I went with the little safer route. And at this point, there was nothing for price to do but to go down. And the best thing we can see is price go down slowly. Slow price action targets. Fast price action induces. So you can kind of see it, this slow build up targets. Our nearest target is this liquidity. If price hits this level, we can buy. Obviously, we're out of session. Whenever price moves slow, I just leave my stops open. What I find is it likes to come retest wherever the majority of the people get in. This is also spread hours, so depending which broker you use, spread might be up here during the market close, so it's just good to leave your stops open. So overall, it turned out to be a really good day. This is out of my timings. If I traded Asia, I would buy this. So these two hit TP. So this one's about 3.5 hour. This one's about 2.5 hours. So this is about 6 hour combined. I lost about probably 1.2, 1.3 here. And I lost 1 hour here. Like I said, this one's a valid loss. This one, I should have closed. So overall, up, close to 4 hour on a day, maybe a little bit less, like 3.8, but overall not bad. So that was the trade ideas for that day. Make sure you guys tune in to the next YouTube video as well. I'll be showing you Wednesdays and Thursdays trades as well. And tune in on Sunday as well, as we do go over fundamentals. And what we do actually is I show you guys where price is likely to go based on fundamentals and technicals, and I keep track of everything. For those of you that tuned in last Sunday, we told you that price was likely coming to do the daily rebalance on DXY. And if you tuned into that and you followed the logic that I gave you, you would understand why price moved the way it did. So yeah, this is really good information. So this hit TP. Now we're at a pivotal moment. Either price does this or price does that. NFP is going to be the deciding factor for our directional bias for the next week or so. So yeah, make sure you guys tune in to the next recap as well as Sunday's fundamental videos. I hope you guys have a great rest of your day.